Welcome back. Australia commenced building roughly 180,000 dwellings in the previous financial year. That places it about 60,000 under the federal government's aspirational target, which is to build 240,000 homes per year, reaching 1.2 million in 5 years. Now, after year one, the shortfall means Australia's going to need to construct about 255,000 homes per year over the remaining 4 years. So to discuss today's building activity data and whether we can actually reach the target, I'm joined by Tim Reardon, Chief Economist at the Housing Industry Association. Tim, good to see you. Do you reckon it's still possible that we can get there to 1.2 million homes?
Well, thanks for having me. It's certainly possible, but I think it's very unlikely. It was an ambitious goal, remains an ambitious goal. I think what is realistic is that by the time we get to the end of this 5 years, not quite building 1.2 million homes, but getting to the run rate of 1.2 million. That's certainly achievable. What we're looking at the moment, that first year, as you mentioned, 25% behind the run rate that we need to be achieving. But that's probably the low point in the cycle. That year, the 24-25 financial year, is when we saw interest rates at their highest. They've come down now. What we're starting to see since this data came through is that home building activity is picking up. We're starting to see some of those benefits coming through of reforms that have been announced over the past couple of years. Of course, the federal government ones, the reform of the EPBC, is something that probably we won't see the benefits of in terms of lower home prices for 5 to maybe 10 years away. But some of the state government reforms are starting to kick in, and what we're seeing at the moment, new home sales and other data coming through, particularly out of New South Wales, is starting to indicate that, yes, that cut to the cash rate, which has boosted activity just a little, is now starting to flow through with land coming onto the market at a price lower than what the existing land for sale is. And that means getting new homes to completion at a lower price than what they have been over the past 12 months. And those fundamental reforms at both the state and federal level are going to have to continue in order to keep the cost of construction below what it currently is if we are to get anywhere near that 1.2 million homes.
Yeah, we've obviously seen quite a few interest rate cuts now from the Reserve Bank. That's helping to stimulate the economy a bit. And it seems like, is the construction sector feeling a bit better? Is sentiment improving there?
Sentiment is certainly improving. Market confidence still is a little challenged. It hasn't bounced back as quickly as what we anticipated with a cut to the cash rate. Maybe one more this year, another next year might bring that up. But it's the two markets, particularly around Sydney and Melbourne, that have been very slow to respond. And that is because new homes there, new house and land package, $1 million or higher is prohibitively expensive, and it comes back to that land price. We can see in other markets, Queensland, South Australia, Western Australia, where land has been relatively more affordable, that home building activity in those areas remains relatively strong. Consumers have been slow to respond to the interest rate cut in this cycle. Fears of insolvency, fixed price contracts have certainly eroded that market confidence. And so what builders have done to respond to that is to go back to building what we call spec homes, which is they build homes and then sell them rather than selling homes and then building them, which has been the model for the past or since the GST was introduced. And those builders that have gone down that path of building spec homes have certainly seen very strong sales. And what's happening at the moment, and the pickup in activity that we're likely to see over the course of the next 6 to 12 months, is that volume of self-initiated work from the building industry is going to keep that volume of homes a little above what it otherwise would have been. But it's not until we start to see reforms, the New South Wales government reform of underwriting the risk of 50% of off-the-plan apartments. That initiative is one of the first that we have seen in New South Wales that will genuinely move the needle and see an increase in the volume of new home builds. They've also introduced changes to planning regime which are accelerating the speed at which detached houses are coming into the market. And similar reforms that are being discussed in Victoria could also have a positive impact. Of course, 2 weeks ago, the federal government announcing changes to lenders' mortgage insurance, which is very quickly having an impact on first home buyers moving into the new home building market. At the moment, we're in a unique position in the cycle where the cost of building a new home is arguably cheaper in most markets than it is to buy an established home. And so as a consequence of that LMI scheme, we do see a very large number of first home buyers shifting into building new rather than buying an established home. And so those initiatives, as they continue to be developed and as governments are now increasingly focused on addressing the cost of delivering new homes to market, it's possible that if those reforms continue, that we will get to that 1.2 million run rate. Not necessarily building 1.2 in 5 years, but the rate that we need to get to.
Tim, we're almost out of time. How short do you think we'll be at this stage?
At this stage, at least 1 year or 20% short, so 200,000 homes short of the target.
Okay, look, Tim Reardon, Chief Economist, Housing Industry Association. Great to have you on the show this afternoon.
Thank you.